I've spent hours finding and evaluating great companies for beginner investors. After watching this video, you will have the exact tools you need to do the same thing. As a beginner investor, when you first think of what are the many tools that I need to find great companies, you may start off by being lost or not knowing what direction to actually go into. But the first thing you want to do is simplify it all the way. You want to start off by thinking about the many companies that you're familiar with. So let's say that you have an iPhone, for example. That's one company. That would be Apple. Let's say you go to work and you have a Microsoft computer. That's a second company. That will be Microsoft. Or let's say you're driving around town and you happen to see a Tesla out. That's a third company right there that you can further evaluate to find if it's the right company for you to invest in. You could even think as simply as going outside to go get groceries for your family. Think of the many places that you go to. Let's say Costco, for example. That's another company that you can evaluate. Basically what I'm saying is, as a beginner investor, you never want to overcomplicate it. Investing as a whole is already a broad scheme idea to you, so you want to simplify it as much as possible to make this a real tangible thing that you can achieve. We've made it over to Forbes list. We can look at our top billionaires and what companies they're a part of. We can look at number one spot and we can see Elon Musk. You can see that Elon actually owns Tesla. So that's another great company that I spoke on earlier that you can evaluate or look into as a beginner investor. Our second company is going to be Amazon, owned by Jeff Bezos. Our third company is going to be Facebook, or Meta, owned by Mark Zuckerberg. Our fourth company is going to be Oracle. This is another company that's on the stock market. We can also go to the Bernard family. He owns companies such as like Louis Vuitton, a lot of luxury brands. We can even go to number 6, Warren Buffett, who's a famous investor in the stock market, and that's actually a great way that he generated a good majority, if not all, of his wealth. We can even look that he owns the company Berkshire Hathaway. That's another great company. Or we can go to Larry Page or Sergey Brin. These are two good companies right here, Google. And that's just to say that you can really look anywhere to find great companies. You really just need to break it down into as simple as a form as possible so you as a beginner investor can understand and have a good sense of where you want to go really. Now that we've left the Forbes list and we have a good understanding of how to find companies, we're going to look over to Google Finance, where you're actually going to exactly see how you can evaluate these companies for yourself. So let's say we go over to Google Finance right now. We want to look at Apple. So we can go to Apple, and you don't want to look too close at the short-term mindset. You want to have a long-term mindset when you're investing, which is very key. So we're not going to be too keen on the 1 day, the 5 day, the 1 month, unless you're like an active trader or something like that. You don't want to focus on those. You want to really focus on the 6 month, the year to date, the 1 year, the 5 year, and then obviously the max is like the grand scheme of everything. So you can go on the 1 day, you can see we're up 1.95%. I'm just walking you through this. So a lot of you, I don't know if you know how to use Google Finance or not, but in this video, you're going to learn how to. So on the 5 day, you can see that we're actually up 2.3%. Then on the 1 month, you can see that we're down 11%. And this can actually be viewed as a great buying opportunity for many investors, as a 10% dip is actually viewed as a correction, and a 20% dip is actually viewed as a recession. So now that we're back on Google Finance, we can kind of see that on the 6 month, we're down 3%. On the year to date, we're down 12%. And on the 1 year, we're up 26%. So now that we see that we're up 26%, we can also find buying opportunities in the market this way. So you can see here that, like I stated earlier, that a 10% dip is a correction. So you can see right here that this dipped right at 10%. So this could be a great buying opportunity for you if you are trying to be a shareholder of Apple, or if you're trying to even increase your share position as a whole. So you can see that in this situation, since that 10% dip all the way up until January, this was our high. We actually ran up 23% since that date. And obviously you see that we're back down again. We're actually down around that 13 to 12% mark. So, or 15% actually. So you can actually see that this is a great buying opportunity as well. Obviously this is not financial advice. This is just me telling you exactly what I would do in this situation. So we can even go to the 1 year. This is going to be a more broad scheme of things. You can see that it has that nice chart pattern of just going straight up, all the way up 280% over the last 5 years. We can do the exact same thing on the 5-year chart. We can take this little dip right here, and we can see that it was down 20% on that dip, and you can see what it's done ever since then. I mean, even up to its high, we're all the way up at 85% since that. So you can obviously see that during 10% dips or 20% dips, those are great buying opportunities for you all. And you can also do a great job of evaluating the company by seeing how it's performed over the year to date, 1 year, 5 year, or max. Earlier, we talked about finding companies that you're familiar with. So now that you've done so, and now that you've also looked at the technicals, and you can see that on the year to date, we're actually down 12%, but on the 1 year, we're up 26%, and on the 5 year, we're up 280%. You can view this as a good long-term position for your money, because you can see that it's going up over time, and that these small little dips should not shake you out, and that they should just be buying opportunities. As you can see that ultimately you will be the winner in the end. And then we can also, on Google Finance, we can actually go to this compare button. So let's say you're in between two tech companies. So let's say, obviously for this example, we're using Apple, and let's say you're like, man, I don't know if I want to buy Apple or if I want to buy Microsoft. So you can actually go over here and you can type in Microsoft, and you're actually able to compare the two companies. So right now we can see what they're comparable at on the day. Apple's up 1.9%, Microsoft is up 1.4% on the day. You can do the same thing on the 5 day. You can do the same thing on the 1 month, all the way through, like we just showed a little bit earlier. Year to date, same thing. But we really want to focus on longer time frames, such as the year, the 5 year, and the max. So you can see Apple's actually up 26% on the year. You can see that it's up 280% over 5 years, while Microsoft is up 184% on the 5 years. So you can see that Apple has actually been a better long-term investment over the last 5 years rather than investing in Microsoft. So that's another way that you can actually evaluate companies against each other on just a basic technical standpoint. And just for further reference, you can also see that they're color coded right here. So Apple's going to be blue, yellow is going to be Microsoft. So you can see that obviously Apple is outperforming the yellow Microsoft. And before I close this video off, I know I talked about that 10% correction and that 20% dip, which would be a recession. I also want to highlight another point which will give you a good idea of another buying opportunity that you can make again, and we can actually see on the year range. So the year range is the range between the high and low prices over the past 52 weeks. Obviously 52 weeks makes up a year. So a lot of people call this the 52-week range, just depending on what platform you're on. So we can see that on the year range, we are at $164 as our low and $260 as our high. So once we see that, we can see that, okay, let's say for Apple, we're starting to get closer to this $164 price. This will be a good time to buy, as you're buying at the bottom of the range. And then obviously if it's at 260, it's at all-time highs. I wouldn't recommend that. That's a good time to buy. If you do, you want to do it in small position sizes, and the lower that the price goes more to this 164 level is when you want to increase your position size and start buying a little bit heavier. And you can also do the same thing for the day range right here. That's more so just for traders if you're looking at shorter time frames, just identifying when you want to get in and get out the market. So now, as a beginner investor, that you've thinking of all the different ways that you can even find good companies to evaluate in, whether that be just companies that you use every single day, like I gave an example of Apple, Microsoft, Tesla, Costco. All of these are great companies that you can further deep dive into by actually going over to Google Finance, looking at their technicals, seeing how they've done from a long-term perspective, maybe even on the 1 year, the 5 year, or the max. So now that you as a beginner investor have an understanding of how to pick and evaluate great companies from a simple technical perspective, you now have a good idea of how to determine what companies you can slowly start to add to your portfolio. And if you're wondering how to break down your portfolio, I'm actually going to link a video at the end of this video that you can check out so you can understand exactly how I was able to generate $22,000 in the stock market and exactly how I broke down my portfolio. With all that being said, feel free to subscribe, like, comment, share, turn on that post notification bell so you never miss an update, and I'll see you guys in the next video.